New data from the Wall Street Journal is showing a massive collapse in home buyer demand. And this report, it's resulting in shockwaves throughout the real estate industry right now. A lot of home buyers, a lot of real estate investors, they didn't know this information. And now that they know it, a lot of people are getting really bearish on the 2025 housing market. So you can see the report here from the Wall Street Journal titled U.S. Home Sales in 2024 fell to the lowest level in 30 years. This decline in home sales drops to 4.06 million, on par with the drop in demand that occurred in the 2008 crash. And what's scary about that drop in demand is that it's getting even worse in the first month of 2025. And in 1 second, everyone, I'm going to show you the cities in America where home prices are already going down and dropping really quickly, as well as some of the cities where home prices are still going up. However, before that, I want to talk about why this home buyer demand is so low. And I actually want to talk about why home prices haven't dropped by more already. Because you would think, looking at the graph in the beginning, that the prices should also be going down on a national basis. However, the same article shows that existing home prices are up 6% from a year ago. So what's actually going on in this housing market? And the answer has everything to do with the shift in the composition of the people who are buying homes right now. The people who are buying homes in America right now, they are not a representative sample of Americans or aspiring home buyers. Rather, they're becoming a narrower and narrower slice of the U.S. population. For instance, you can see that the median age of home buyers in America, according to the National Association of Realtors, spiked up to 56 years old in 2024, about 10 years older than it was prior to the pandemic. And so the people who are buying are older, wealthier. Additionally, the share of married couples increased to 62% of all buyers, while the share of single females slightly increased to 20% and single males decreased to 8%, while the share of unmarried couples decreased this year to 6%. Now, I think that data is really interesting. Unmarried couples are only 6% of home buyers, yet single women are 20% of home buyers, and married couples are 62% of home buyers, and all of those demographics are older than they were before. And what's particularly alarming is that the share of first-time home buyers in the market has plummeted, with first-time buyers now accounting for only 24% of home sales. Last year, before the pandemic, it was 33% share for first-time buyers. And that first-time buyer rate 40 years ago in the early 80s was 44%. So something is categorically changed about the housing market since the pandemic and over the last 40 years. Way fewer buyers are first time, way fewer buyers are young, way fewer buyers are unmarried couples, and more, the home sale transactions are representing a smaller share of wealthier people. Now, to me, this says that there's a bias in the reported sale prices for homes in today's market. In particular, the NAR also reported that in December, sales volume for homes over $1 million was up 35% year over year. So you just have more and more higher end homes selling, which is dragging that average up, while you have more and more lower end homes in areas that aren't as nice sitting on the market and languishing on the market. And this bears watching in 2025, because as we continue to see the very low demand levels on par with how low the demand was in 2008, I think you're going to see more downward pressure on prices. And when the sales volume on the lower end of the market eventually starts to pick up, you're actually going to see a downward trend in prices reported when that happens. Now, of course, prices are already dropping in several different cities across America. And let's run through those cities right now, because I want you all to be informed where prices are officially dropping. You can see they're not dropping in St. Louis, where my cursor just happened to be on Reventure app. In St. Louis, prices are up 3.8% year over year. These areas in red are where prices are up. And let's actually make this easy. Let's go to the filters tab here on Reventure app and eliminate any metro where prices are up. So we're only looking at areas where prices are down. And you can see it's a heavy geographic concentration in Florida, in Louisiana, in Texas, in Arkansas. This is where values are dropping on the U.S. housing market right now. And among larger metro areas, we can see Cape Coral leads the way. Cape Coral has a 5.6% decline in prices year over year in Florida. Northport, Sarasota also has a 5.3% decline in prices. Go to the next page, we can see Naples has a 3.6% decline in prices. Austin has a 3.3% decline in prices. New Orleans has a 2.2% decline in prices. San Antonio has a 2.1% decline in prices. However, for the vast majority of America, prices are still up year over year, whether you talk about unadjusted prices in median sale price or adjusted prices from Zillow's home value index. Values are still up in most parts of America. And the reason they're still up is because there's still an inventory shortage in some parts of the country. And this is an important point to understand about the housing market is the regional differences that now exist, where some parts are going down, but other parts, most parts are still going up actually. And the reason is that inventory shortage. And to explain this to you so you guys can conceive of how bifurcated the housing market is right now, I'm going to show you a graph that compares inventory in two different parts of the country. The number of active listings of homes for sale. The higher the inventory is, the more likely that prices drop. The lower the inventory is, the more likely that prices go up. It's an inverse relationship. Let's take a look at this graph so you can see just how crazy bifurcated this housing market is in 2025. On this graph, we're looking at two lines. The orange line is the number of homes for sale in Florida and Texas combined. So there's 261,000 homes for sale in Florida and Texas right now entering 2025. That's the highest level in at least 8 years. It's about 20% above pre-pandemic. So we've had a big inventory spike in Florida and Texas, which is why prices there are dropping now. But take a look at this blue line, everyone. This blue line measures the active listings in the entire Northeast US. States like New York, Pennsylvania, Connecticut, Massachusetts, New Hampshire, Maine, and New Jersey. In these states, inventory has plummeted to only 85,000 homes on the market, which is 65% less than Texas and Florida. So there's literally 2/3 fewer homes on the market for sale in the Northeast, which is why prices in the Northeast continue to go up and drag up those national figures. But what's fascinating is that prior to the pandemic, this wasn't the case. Prior to the pandemic, the Northeast and Texas and Florida had almost the same exact level of active listings, and they kept that same level of active listings all the way through early 2022, and then they separated. And the reason they separated is because Texas and Florida and many states in the Sun Belt are in a big housing bubble where prices have become very overvalued compared to long-term norms and where locals can no longer afford to buy homes. Throw on a lot of builders in the South as well as a lot of speculative investors, and you get the recipe for a big spike in inventory and declining prices. However, in the Northeast, prices weren't as overvalued. They don't have as many builders in the Northeast, and there aren't as many speculative investors. So the market is still inventory starved and is still being suppressed by the mortgage rate lock effect. So one thing it's really important for you to understand as a buyer or an investor is that if you're looking in 2025, I would implore you to almost completely ignore the national housing market reporting and national housing market statistics. It's simply not relevant for you if you're looking to buy a home in a specific part of America. Rather, you should go on Reventure app and do the individual research on the inventory trends, the price trends, as well as my home price forecast for your area so you can have better understanding of the actual trends in your market. However, by and large, there is an issue on the national housing market, and that's that home prices are very overvalued just on a national basis. And these overvalued home prices are part of the reason why demand has fallen so much over the last 3 years. We're down to 4.06 million existing home sales from the NAR. That's down 34% from the pandemic peak. It's down 24% from pre-pandemic levels. That includes mortgages and cash transactions. You include both of those, the sales volume is way down. Now, what's interesting is that back in 2008, the sales volume collapsed by a similar amount. Actually went down by even more. It dropped by 40+% from 05 to 08, and then stayed at a really low sales volume for the next 4 years. However, the difference back in 08 was that prices started dropping sooner. Prices started going into negative territory really in late 07 was when they started going down by about 5% year over year, according to the NAR existing sale price data. And then the prices really started plummeting. I would say towards the end of 08, they were down 10% year over year. And then by 09, they were down 17% year over year. And so the last housing crash kind of started slow and then really picked up steam by the middle of 08 into 09. Prices recovered a bit, but then kept going down all the way through 2012. So it was a 5+ year housing downturn in that last crash. Conversely, you go to today's prices. They peaked, price growth peaked in 2021, then started slowing and going negative in a similar way that they did in 06, 07, but then price growth nationally started rebounding in 2023 and into 2024. And I think the reason why this is, everyone, the reason why we haven't seen the same trajectory on prices as 08 is, I'm going to call it threefold. Number one is the mix of sales, which I described earlier. The reported sale price figures from the NAR and organizations like Redfin are biased by the fact that more sales are happening in the luxury market today and through higher income home buyers. So that's just biasing the sales upwards, number one. But number two is the low inventory levels in the Northeast and the Midwest. Low inventory in the Northeast and Midwest is causing prices to go up by more in those regions, which is continuing to drag up the national average. But perhaps most importantly, number three is that we have not yet had an actual recession. And ultimately, to see real declines in home prices, and by real, I don't mean inflation adjusted, I mean like substantial declines in home prices, you have to see job losses. Because there's really only been two times in US history where home prices have actually crashed nationally: '08 and 1929, Great Depression. Those were the two times. And both of those periods corresponded to a point in time where the unemployment rate in America went to double digits, went to 10% or higher. Currently, the unemployment rate is 4.1%. And so long as the unemployment rate stays at 4.1%, it's going to be difficult for home prices to crash in a meaningful way on a national basis. You know, the US government has managed to continually kick the can down the road on this recession by printing $5 trillion, banning foreclosures, doing all types of things. They're doing $2 trillion in deficit spending right now. They imported 8 million people over the border the last 3 years. They've done all these things to try to paper mache the economy and present it as it's really strong, or present it as it's fundamentally strong, and thus the jobs keep growing at an incremental level and there aren't mass layoffs. We'll have to see what happens now with Trump as president. I think certain things that he's going to do might stimulate the economy. Other things that he's going to do might actually cause an economic reset to take place in terms of a flash recession. So we'll have to track all that. But I think that's just an important grounding to understand, you know, the similarities in this housing downturn with 2008 so far. The demand has collapsed at a similar level. But the difference is that we haven't seen the inventory rise as much in the Northeast and Midwest. And the difference is we haven't really seen economic hardship the way we saw in 08, 09. But what I fear, everyone, is that this decline in buyer demand that the Wall Street Journal is reporting just might be the start of things that we're going to see on the US housing market over the next couple of years. Because when I look at the structural demographics of the US economy and society and home buying pool, I'm seeing some things that are really concerning me. And I'm going to talk about this more in a follow-up video next week. But I'm going to show you a preview of what I think are some pretty alarming statistics on US demographics that have to concern you if you're someone who's hopeful that home buyer demand is going to recover and the housing market's going to recover. And this first graph we're looking at here, everyone, comes from the US Census Bureau, and it's the percentage of households in America that have a child or children in the household. And if you go back to the 1960s, almost half of all households, almost half of all housing units had a child in the house or apartment. But you can see over the last 60 years, the percentage of housing units and households with a child inside has plummeted all the way to only 25% in 2024. There was 132 million households, only 33.3 million had a child in the house. You can see this decline in the number of children in households corresponds to the decline in the number of married couples in households. Back in the 1960s, almost 3/4 of all households had a married couple in the household. Now it's only 47%. And so what we're looking at there is a massive drop in family formation in America. That's a structural drop. America's population is getting older. So just through the population getting older, there's going to be fewer married couples and children. Additionally, the younger generations, Gen Z and the millennials, they are more interested in establishing their career. They are more interested in flexibility and freedom than they seem to be in family formation. So we're not seeing, the growth in family formation there. And that's ultimately bad news for home buyer demand, because if we go back to the National Association of Realtors report, 62% of home buyers were married couples. 62% of home buyers were married couples. A vast majority of people who are buying homes are going to be married couples. So if you're seeing a decline in the number of people who are married and the number of people who have kids or are going to have kids, that is going to structurally reduce home buyer demand, especially when home prices are in a bubble and overvalued. Home prices are about 27% overvalued compared to long-term incomes. They're 21% overvalued compared to long-term rents, and they're over 50% overvalued compared to long-term inflation levels. So when you have an overvalued housing market and you have a societal pool and demographic pool that doesn't feel pressure to buy through family formation, you're going to end up with extremely low home sales. And those home sales are going to stay low until home prices come down. And this is the reality that I think is now starting to dawn on a lot of real estate professionals right now. A lot of real estate professionals, they kind of deluded themselves into thinking the last 2 years that the demand drop was temporary, that the Fed was going to cut rates, it was going to be over, Trump was going to get elected, everything would go back to normal. They're now realizing that those things didn't really stimulate an increase in demand and that the problem is much bigger than that. It's a combination of record high prices that are heavily overvalued with a demographic pool of people that isn't interested in buying a house or just isn't in the part of life where they are going to buy a house. That's why demand is low. But again, I want to impress upon something to you guys is that demand has dropped. Demand is at the lowest level in 30 years, but we have not seen the supply levels go high enough to cause national price declines. You can see here on RevenTrap, we have a metric called inventory surplus or deficit, how supply looks to the long-term average. In the entire Northeast and Midwest, inventory and supply is below the long-term average. In a lot of other parts of the country, it's right around the long-term average, and only in a handful of states, Tennessee, Alabama, Florida, Texas, Oklahoma, Colorado, Utah, Arizona, is supply now high enough to cause price declines. So understanding the future of prices is a twofold analysis. It's understanding demand, but it's also understanding supply. And what we do here at RevenTrap is we combine those two things together, demand and supply analysis, to come up with our home price forecasts. It's a 12-month home price forecast based on an index from 0 to 100, and this index shows big differences in where prices will go up and down in America over the next year. And these differences exist when you zoom down even to the zip code or neighborhood level. Here in Miami, there's some parts which we project are going to drop in 2025. There's other parts we think are going to go up. And the underlying analysis has to do with the recent appreciation, the days on market, the inventory, and the price cuts, all pillars of supply and demand analysis in the housing market. So what I would implore you guys to do, if you're trying to get a better sense of where prices could head in your market in 2025, head to www.reventure.app right now and sign up for a premium plan. The cost is $39 a month, ultimately a very affordable price compared to the cost of buying a house and gaining peace of mind about where prices could be heading in your market, as well as how over or undervalued they are from the long-term norms. Those are the two data points you really got to understand as a buyer, an investor, or a seller in 2025. So head to www.reventure.app right now, sign up for a premium plan, and access that data for your zip code, your county, and your metro. Write it down, put it in a spreadsheet so you can make a more informed decision in 2025 as a buyer. This market is shifting, it's shifting fast.